I'm going to bring you right now into a this is a different kind of segment in here where I'm going to give you a little peek into the type of analysis that I do, and I'm going to project the Dow Jones Industrial Average for you. And this is really, we'll call it Cycle Analysis 101. It's kind of a primer with my analysis in there for the Dow over these next couple of months, and I think you're going to find it very interesting. You've heard me say, as I said in this show, that June through August had lots of downside risk in the market. I'm going to take you through the basics of cycle analysis on the Dow weekly chart, and then we're going to look at it as a blank canvas, and then take it through the artful projections that I often bring you. Especially, we're going to be looking at the how and why of this analysis, and how I have gotten to the projections that the market would be in a period of risk here as we got into the summertime. Cycle analysis is the rhythm of the market. It's a visual depiction of money flow. Our analysis finds those rhythms in the market and adds into it momentum and support and resistance analysis, and we use multiple time frames. As I'll show you all of the time, weekly and daily cyclical analysis, and we look at monthly cyclical analysis all of the time also. I'm going to demonstrate it to you with a 4-chart progression, and I'm going to end with the why we think this downside risk is here and what the targets are for the Dow on the downside. So not only am I teaching you method in here, but I'm also showing you how I come to this analysis that I think is going to be very interesting to you. So I'm going to bring in a chart right now, and this is a chart of the Dow Jones Industrial Average. Let me get it centered in here for you, okay? And this is a very interesting chart. So we're looking at a 10-year weekly chart in here, and I'm only going back in here for about 2 years to show you the weekly rhythms. And what I want you to do is to really get a sense for how we do this analysis and how I came to the projection. So we have a cycle analysis workshop, and it's based on J.M. Hurst's 8 principles of cycle analysis. The very first one is the principle of cyclicality, which says that price movements correspond to a combination of waves that exhibit cyclic characteristics. So there's a combination of waves in here that actually have a recurring pattern. Do you see the waves? Well, it takes kind of a trained eye, and how you get there I'm going to show you right now. So this is just simply a candlestick chart, and in here are rhythmic cycles of money moving out and money moving in. It's a little hard when you first look at this to really see it, but I'm going to take you through the steps to see it. So I'm going to put up the next chart in here, and we always start with cycle brackets on the bottom. This is simply a drawing tool. What this drawing tool shows you is that there are common periods of rhythms in the market, and where they bottom, where they trough, is usually an important low. You can see an important low right over here. And there are 2 cycles in here, what we call a dominant and a minor. And this is a cyclic harmonic family, we call that. There are countless cycles that are all work together. And one of the principles is the principle of summation, where the sum of all of the cycles that you see here are actually what happens on the real price chart. I'm going to show you a little bit more about that in a moment. But you could see the important low right over here, the important low right over here, and the important low right here. So they're not exactly, it's plus or minus a few bars. Remember, this is just the energy of the market. We're not looking at exactly. We look at zones of time and zones of resistance and supports. And cycle analysis is a way to project in time and price. There are very few types of analysis that allow you to do that. So you see the low here and here and here and here and here and here. And then there's a low due somewhere out over here. So we're going to take a look at what this looks like as the principle of summation. How do all of these cycles appear on the chart in reality versus on the bottom, which is just simply theory, ideal patterns. We'll take a look at the Dow Jones Weekly, and now you can see in here the harmonics. There are 11-week and 22-week cycles that make up each of these harmonic families. So you can see that, let's just look at this one right over here, and note that this is a negative cycle. We call this negatively configured. When that happens, the next cycle usually rallies but doesn't get to that same high. As you could see, that happened right over here. So this cycle right over here, the dominant cycle, the two minor cycles, as you can see right in here, they don't have to be exactly the same length. And each of these has two minor cycles. You can see that, how this all turns out, and this big decline right over here. So what happens is that when you get into the nested areas where two cycles are coming down together, you get the biggest declines. That's like happened here and here and here and here, and this astoundingly large decline right over here. So what we're able to do then is to take this and extrapolate out of it that there's a declining phase right over here. So what we do is we put in the support zones, and if it's a rally, we put in the resistance zones, and come up with a series of potential downside projections that we have in here. So you can see in here the very clear cyclic harmonics in these weekly cycles in the Dow Jones Industrial Average. That I took it from the blank candlestick chart to showing you the ideal rhythms to how they turned out in reality. A positively configured cycle with a right-hand translation. In other words, it makes its peak way on the right side of the cycle, only gives you a little time to decline, and then the next rising phases almost always bring you to a higher high. That's exactly what happened right over here. But when you get into a negative cycle like this one, then the next rising phase fails, usually in resistance areas. We had this one failing lower. This got bigger, higher up there as the Fed influenced price, but they have a very hard time influencing the cycle rhythms, and you can see in here these declines. So how big are the declines? I mean, how much can you count on these declining phases bringing you what you think? I have one more chart for you to see in this series, and that's right over here as we bring in the cycle analysis with the declining phases and show you that right over here. So what you have in here are these yellow zones which show you these declining phases. And each of these 8 cycles that we're looking at right over here that take you back more than 2 years, almost 3 years in time, and this declining phase right over here. So let's look at this one. This was a 12% drop under a very bullish condition. This was only a 6.7% drop. This was a 17% drop from the minor cycle peak to here, 8% drop, 6.3% drop, an astounding 38% drop in the largest, fastest decline in history. And when that happens, you pretty much assume that the energy that broke that to the downside still exists. It fails here just over the 78.6%, gives you that sell signal, and then takes you to where we are right now. So there is our downside projections as you see. So we're looking for somewhere between a 13% and a 16% decline. These are the supports, down to the 38.2, the 50%. There's an outside chance it can get down to the 78.6%. So these August targets that you're looking at right over here are 24,000. Let me just move this over to where you can see it. 22,900 or 21,800 on the downside. To me, the highest probability is that center area, about 50% on the downside. That's the 50% retracement of this move that you see right over here. But it could stop at that 13% decline, which is a 38.2. So that's 24,000 on the Dow, 22,900, or 21,800. This time frame in here, now remember, we're looking at these cycle patterns in here that give you what are the cyclic harmonics of 22 weeks to this low or 22 weeks to this low. That takes you out over here into somewhere around mid to late August. Where this decline that began will then bottom, and then you get into another rising phase. So this kind of gives us a sense that what we're looking for here is a big decline, but not a devastating decline. And then another favorable period out over here as the rebound right over here continues. This rebound that started right over here will correct and then continue. Our longer term analysis, monthly analysis, has this decline rolling over, as I told you about, that I discussed in the longer term analysis, that it would then roll over and move down into 2021. So when I look at this weekly date right over here on this cycle, that shows you into only January of 2021. So that means that not only is this cycle involved in the bear market that we believe is here, but there'll be another one past that takes you out into mid to late 2021. This looks to me just simply like a corrective period. Well, it's kind of a multiple corrective period because this is an upside correction, a downside correction, an extension of the upside correction, and then the resumption of the bear market. That's how I see it out there. Of course, I could be wrong, and this could be much stronger, and even if it goes to a new high, that wouldn't be the most ridiculous thing based on these patterns. Then I will have to evaluate my bear market call. But at this point, not at all. And at this point, you could see the high probability that based on the way that I showed you this cycle analysis right in here, that we are in the beginning of a declining phase, which should last something like another 6 or 8 weeks on the downside. So some of the evidence that I just brought you is that there's a pretty good decline right now. I showed you how we got to it by taking you through those 4 different charts and the projection that to me looks very, very clear in here of this decline. I've been looking at this now for several months and saying that pretty good chance that the summer risk was going to be here. You can see risk ahead, act accordingly. That is our look at Cycle Analysis 101, how we got to our projections on the Dow. I hope that was incredibly informative to you, and we'll see how these cyclical patterns do continue, and I think that you're going to see an amazing continuation of consistency that we have had right there.